What's going on, guys? So in trading, sometimes you kind of have to understand yourself in order to be profitable. And that's exactly what I had to do, was understand myself. Now, before I get into the video and let you guys know what exactly I'm talking about, I do have one space available left to join Evolution Traders. As we come into the end of the year with only a couple of months left, best time to kind of jump in, lock in this price point as it is due to double when the next person joins. So let's just look at the NASDAQ 100 today. I had an intention of playing some futures today. The market has been moving nice. However, we do know that we're coming in on 7 days consecutive of making a new high. So with that being said, we were due to kind of, see a little bit of a pullback. Now, we got a little bit of a pullback intraday. We pretty much essentially finished flat on the day. That's not necessarily a good thing or a bad thing. It is a little bit of a pause, right? So what you want to see in a healthy market environment is these pauses, because the higher you go, the faster you go, the bigger the pause is going to be. Now, perfect spot for us to kind of come back in and test the daily 5-day moving average, which is your nearest term sentiment. Now, I was doing a little bit of live trading with some of the guys from the room. We had a couple of people take a little bit of money on some scalps. I really didn't get anything going too much. I locked in about $100 on a trade early and then kind of gave it back a little bit. I was able to catch a couple of plays on the option side of things. I caught Amazon as well as Tesla. Tesla provided a nice little short opportunity at one point in the day. So that'll definitely make up for the lack of P&L made on the future side of things. So what I want to talk about, if you guys were watching the futures today, there was a point in time off the open for the first hour and a half where the market literally felt like it was going nowhere. So I had a couple of levels marked out. I had the price point of 15,417 to the high side. If and when we ever got to that point, I was looking to go long. That pivot point never came into play, so it's completely irrelevant. Now, if we look at the first hour low sitting down here at 15,348, this was the first scalp position that I took. I took a little bit of a play here into this new low that we put in at 740, right? So we came down, we kind of bounced up a little bit. I didn't want to give myself the full 1 bar stop here, as this was a lot of size that was put on the table. We kind of trickled around, came back into the 20 period moving average, and then we kind of came back down again. So I took very minimal profits off of this little scalp play. It didn't go the way I was expecting it to go. And as I was kind of sitting there, I was letting everyone know it's going to be when I take off that this market decides to pick a side, which way it wants to break out. So right before, if you guys go back to the live, or if you guys were in Evolution Traders on the voice call, before I took off to go get a cup of coffee, I said, watch the 335 area. 335 is our short position, 335. That was the low that we put in below the first hour lows. Now, one thing that I do want to point out is we broke that position here at 8:20 in the morning, and then we immediately snapped back. Now, we never closed above this candle. We did, however, close above the 20 period moving average. So if you kind of look at where your entry was going to be at 335, even if you were to give it a 1 bar stop, you're giving yourself about 30 points worth of risk all the way to the 65s. Now, depending on your position size, if you were playing a little bit larger size and you were expecting this crackdown to go immediately, more than likely you probably stopped yourself out. So you can see that the market was kind of toying with you, right? The market was playing around with you before finally it wanted to go. Now, the only good thing about this particular play is that it did set up a 20 SMA to the short side. So if you were kind of sitting on those, definitely you would have known to get in here below the 35s. And it went from 35s all the way down to 286. So it was about a 50-point move. And lo and behold, I was out getting a coffee. I did not want to mess with the price action. So the point of this video is that sometimes you have to understand yourself as a trader. When I took this first scalp position here, okay, I took this first scalp position here. Once we started to lose this 20 SMA, we started to lose some of this pre-market action here. I took this scalp position and I quickly locked up the profits. Now, when we kept coming down into the bottom of the range and we kept bouncing and we came down and bouncing, what it was making me want to do was take every single short position here, anticipating that we were going to break. It was wanting to make me get into a long position and just hold it, hoping that we come all the way back up to the top. So as soon as I identified myself starting to force those type of ideas onto the chart, I knew right then and there it was time for me to walk away. Because if I did not walk away, I could have seen a couple of things happening. Me taking a short position down here with over leverage, meaning I'm playing too many contracts, trying to catch this big break and stopping myself out prematurely on the bounce. I could have seen myself getting long from here and just hoping to hold it to come all the way back up to the top. And what would have happened is it would have broke down on me and I would have taken a huge loss. So one thing that I want to point out, if you understand yourself as a trader, you understand when you're getting your setups and when you're not. If you're not getting your setups, it's time to walk away. Regardless, would I have loved to be here and catch this move? Of course. Was I in the right mindset to sit around after I was already getting extremely frustrated and already catching myself wanting to take every single break when we came down into this area, or wanting to take these bounces, expecting it to come all the way back up to the high of day? Probably wouldn't have been the best thing. Now, if we just kind of break down what did happen here, if you did enter this play and put a 1 bar stop, you would have made almost 50 points, depending on where you'd like to take profits. If you would have gotten back into the long once we reclaimed the 20 SMA, again, very large candlestick from 351 all the way down to 319. So about a 30-point move, you would have made some money to the top side. What I'm starting to notice here, if we start to look at some of the average true range here on the NQ, at any point in time, the high point was around 21 points ATR on a 5-minute time frame. What I think going forward, I'm going to start to do and mess around with a little bit more is allowing these trades to actually work out, right? So I want to give myself a bigger stop loss, but allow the trade to kind of develop. If I go ahead and I put a 40 to 50 point stop loss on the NQ, now mind you can't do this playing multiple mini contracts or a dozen micro contracts, but I'm talking about if you want to play 1 or 2 micro contracts and allow yourself to kind of stay in these trades a little bit longer, put on a 40 or 50 point stop loss. So for example, if we were to put on a 40 or 50 point stop loss here on this particular play, I'm going to draw a box here and I'm going to kind of show you exactly what I'm talking about. So, and I've been kind of noticing this and kind of just been trying to document this. So it's going to be something that I'm going to be playing around with a little bit. So at this low point was around 348. So if I go up here to my 1 bar stop at around 395, we're looking at almost a 50 point stop loss. Now, what I want to kind of make clear is that if you do set this 50 point stop loss, you're going to be sitting into a lot of price action that can get choppy like this. However, we never even came close to taking out that 50 point stop loss. So with that being said, you know, if you were playing 1 micro contract and you did get stopped out, you would lose around $100. If you were playing 2 contracts, you would have lost about $200. However, it would have allowed you to get the comfortability to allowing this to work out. And if we look at the ATR at this point in time being around 20, then if we had a 40 or 50 point stop loss, that's essentially risking it's essentially a 2R risk on that particular trade, right? So we're going to risk 2 times the ATR, meaning we're going to give it 2 full movements of that ATR range on a 5-minute time frame to essentially let the trade work out when we get our setup. So in this particular case, we would have been able to get in on this particular trade at around 348, and it does drop down to a price of 287. So you can see in this particular case, it's almost a 60-point drop to the downside. Now, of course, you're not going to catch the whole move, but if you allow yourself to be in these trades and allow yourself to be calm and be patient, even when it's doing this kind of frustrating stuff here, you would have been able to catch this move. Now, if you do this particular short setup, right, 335, and if we kind of put ourselves a 40 or 50 point stop loss on that, it would take us all the way up to around 375. Okay, so this is going to be your max pain, and as long as we stay below and we don't close over it, you're going to try to catch this move. Now on this particular play, you would have caught the move relatively quickly. You wouldn't even have needed to give it a drawdown. Now, for example, look at this long setup here. If you do another 40-point stop loss, you can see you're going to give yourself a little bit of room below your reason why candle. You're going to be entering in here at 10:05 on the confirmation. It does pull back. However, you're still in your zone. Okay, you're still in your ATR that's double, right? So if we're looking at a 19-point ATR and we give ourselves 40 points, we're risking 2 to potentially make 2. We're risking 2 to potentially make 1. So what that means is if we do start to get this breakout, you can see here we go from a price after entry at around 348, and then this little bit of consolidation here takes us to 327. This would essentially be a 1-to-1 trade. I mean, excuse me, risking 2 to make 1 on this particular trade. And then when we go all the way up here, it would be a 1-to-1, meaning we're risking 40 to make 40 points, and you would have been stopped out here. So I'm going to play around with this a little bit going into next week, just to kind of see how we do with that, giving myself whatever the ATR is. If the ATR is 20 or 25, I'm just going to double that ATR. So when I get into a particular play, I'm going to allow that double ATR to kind of be my max pain stop loss. What this is going to do is going to force me to be in trades a lot longer. It's also going to force me to stop taking these small scalp losers when the move doesn't go in my favor right away. Okay, so what tends to happen is, and it's happened to me a little bit more as of late, but I'm getting into these particular plays. Like let's say, for example, this 20 play here, I'm getting into this particular play. It's quickly wicking down and then it's coming back up. And when it comes back up, it starts to put me into drawdown, comes back down, teases me a little bit, comes all the way back up. So it's constantly putting me just a little bit in profit and then in drawdown, just a little bit in profit and then more drawdown, a little bit more in profit, and then it takes it all away. So what that's doing to me emotionally is causing stress. It's causing anxiety. It's causing me to want to stop out of those positions and then take the next one, but double size. And again, that's never what you want to do. So I'm going to kind of expand the risk and I'm going to minimize my size. So by minimizing my size, it's going to allow me to sit in these fluctuations and then allow me to actually catch the move when if it does happen. And if I do happen to take a loss on, let's say, 1 or 2 micro contracts, the most I'm more than likely going to lose is anywhere between 80 and 160 bucks trading 1 or 2 contracts. My winners are also going to be around the same. So again, in today's particular situation, we would have been able to catch 2 winning trades using this risk model and around $100 to $200 in profit, which if you're trading on a prop firm is really, really good money, because the more accounts that you start to add and start to get funded and get managed, you can see that 2, 3, 4 accounts can really start to add up. $100 here, $200 there, $200 here. It really starts to add up. So again, understand yourself and understand your emotions. Understand when it's okay to walk away, because there's always another day. Again, if you guys want to take advantage of getting in the Evolution Traders room, definitely join. That link's down in the description box below. I only have 1 spot left, and then I'm going to be doubling the price. I'll see all of you guys on the next video.